Hey, it's Rob. Welcome to the Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. See, often the challenge is we take our precious time, we go to work, we get a paycheck in order to eat. But imagine a world where money could make you money, then you could take that time and spend it with family, friends, engaging in a purpose greater than yourself. That is what the Everyday Investor TV show is all about, teaching us how to grow our money, teaching us how money can make us money. Remember, whenever you're offered any type of investment opportunity, always ask 4 questions to start. Number 1, what's the return on investment? 2, when do I get that return along with the money I put in? 3, what is the minimum investment amount needed? And 4, look them right in their eyes and ask them, what is the risk, the downside? You're gonna really enjoy this show. Don't go anywhere. We'll be right back.
So if you go to a B lender and you have good credit, you have some net worth, but maybe you just became self-employed, so your income's a little bit wonky.
Okay.
You can still get a pretty good rate from a B lender.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey guys, it's Ken Beekendam from LegalSecondSuites.com, and my tip of the week for you guys is when you're in your basement and you're wondering, can I legalize this space? Here's the number 1 thing that you need to check, and it's your ceiling height. Because in the Ontario Building Code, the minimum height requirement is 80 inches, 6 foot, 8 inches. And that's for at least 50% of the ceiling area. And we need a minimum height of 77 inches underneath the bulkhead. And this is the Ontario Building Code, so it covers the entire province. So no matter what city you're in, please know that those are the minimum ceiling heights. So if you have those heights, typically everything else is easy to follow. Ceiling heights is one thing that's could be very expensive to fix if we don't have it, but there are ways that we can solve those issues. Just remember that under the Ontario Building Code, everything is possible, everything is fixable, but it may not be feasible from a budget perspective. So double check your heights before you decide to proceed with the project. Thanks for tuning in, and check out LegalSecondSuites.com for more information.
Hey, it's Rob. Welcome to Everyday Investor. I'm talking to my good friend, the mortgage guru specialist, Kyle Ford is with us. Kyle, thank you so much for being on the show with me, man.
Always a pleasure, Rob. Thanks for having me.
I mean, and I say thank you because you're all over. And where are you now? I'm in Aruba. Hey, Kyle, where are you? I'm in Jamaica. I'm down in Turks and Caicos. But thank you for coming all the way back to Ontario to have you on the show. But no, I really love your style, man. You are an investor yourself, aggressive investor. But you also have a big mortgage brokerage outfit where you help other investors either borrow money, lend money for a good return, and even pull money out of their properties if they need to. But at the same time, married and have a family and your little munchkins there. So how do you kind of talk to me a little bit about life-work balance if there's such a thing?
Yeah, well, the first thing I want to say is real estate opportunities are everywhere. So you don't know if the best deals are in Canada unless you go to Turks and go to Aruba and go to Jamaica. So those research trips are vital for me.
You should buy I think you should buy a hotel in Aruba, or been there, done that.
We're working on it.
That's right.
Maybe that's for the next show.
Oh, so it hasn't closed yet? You've tied it up?
We're in negotiations.
Okay.
We're in negotiations on that right now.
Okay,
so we're finalizing financing. Once that's through, then I'll be free from an NDA to speak publicly on that one.
Well, listen, didn't mean to put you on the spot, but at least we give the audience a little bit of a tease of what's coming.
Exciting stuff on the horizon.
But you're right, my good friend Michael Saraceni from Keyspire always says, invest where returns are best, and that's kind of what you've been doing.
Absolutely, absolutely. So yeah, we've been pursuing opportunities abroad, but at the same time keeping business growing here in Canada. The mortgage business has been more active than ever. Lots of interest rates in the news, rates moving, market shifting, things happening. So always excited to be a part of people's journey and help give them sound mortgage advice. And then on the investment side, with in terms of work-life balance, it's cottage season, so we have the cottage business. Chelsea's very busy with that. And then we're working on some development projects, large multis, things like that are just, they're running in the background all the time.
So let's talk about, I want to talk about 2 or 3 things in terms of the business sense and your specialties. Okay, so Rav needs money. I'm a contractor, I'm an investor, I found a property, and I need a couple $100,000. So, you know, I don't necessarily want to go to the bank. I can't necessarily go to the bank for whatever reasons, but everything's in order. All the T's are crossed, I's are dotted. I come to Kyle and I say, Kyle, I need a couple $100,000. Take me from there.
Yeah, so there's 4 tiers of lending, essentially. There's your big banks. There's your A lenders, conventional, the big green comfy couch, the big blue one, the big red one. I won't name names, but there's your big mainstream banks.
I think a red one just changed their logo too.
I think they did too.
Yes.
So those are your big banks. Those are your main A lenders. But also on the A side of lending, there's monoline lenders. So these are still institutional lenders who compete on rate. And there's also credit unions. So credit unions aren't bound by the same guidelines as the chartered banks, but are still good rates, good terms, and overall conventional financing. From there, there's B lending. So B lending is, once again, institutional money, but they're lending their own cash. They're not lending on a credit source or something along those lines. So the rates are a little bit higher, but they're more open to discuss your income situation. You're a contractor, you're self-employed, your income is taken a little bit differently than a conventional bank file.
Yeah.
So they'll look at that differently. They'll charge you a little bit more on the rate, but you can still get a deal done.
Or maybe I didn't, return my VHS Rogers video, dating myself, on time, and so my credit's bad now, and the bank doesn't want to look at me, but a B lender will.
That's right. And an interesting thing there is B lender, their interest rate is called pricing. So if you go to a B lender and you have good credit, you have some net worth, but maybe you just became self-employed, so your income's a little bit wonky.
Okay.
You can still get a pretty good rate from a B lender. If you maybe have that previous credit issue, you drew the short straw in college and the utility bill went in your name, and your credit's a little bit bruised, the B lender will still lend you money, but they're going to increase their pricing, their interest rate, to account for that additional risk that comes from the credit issue.
Okay.
So I call them more of a common sense lender. Tell me what happened. Write a story. Tell me the Coles notes. On the A side, on those chartered banks, you got to fit in the box. If you're not in the box, you're out the front door. So
and so as Kyle is my concierge, my liaison, my middleman from the actual lender, how many A lenders do we have to be able to go to?
There's 6 main banks in Canada. There's probably 30, 40 monoline lenders and hundreds of credit unions.
Okay, so that's on the A.
That's on the A side.
Now on the B lenders,
let's say 50 across the country.
And so this is where a mortgage specialist is important, because now I have access to about 100, 200 people through you.
Yeah, 100%. And that's a key point there, is as an independent agent or broker, we don't work for those institutions. We work with them and for our borrower. Mm-hmm. So we represent our borrower and bring them to those institutions and lenders and profile their file and put you in the best light to that lender and get you the best terms.
Yeah.
I didn't specifically say rate because it's not all about rate, especially as investors.
Yes.
But best terms, prepayment, readvanceable mortgages, a HELOC.
You know why I know it's not about the best rate? Because I had, and I don't know why. I mean, my first property is when I was 16. I'm 50 now. But for whatever reason, a couple years ago, when I could get like less than 2, I locked in. And I had a phenomenal rate. Then things happened and it even went lower and I wanted to do some stuff. So I refinanced my house, paid $25,000 in fees. the number still makes sense that I do that, but that's what you mean. Yeah, Rav, you got a good rate, but you didn't have a good, get out strategy. You had to pay all that interest.
That's right. And I'll use this opportunity to plug one of my favorite cheesy lines, which is life is variable. Your mortgage should be too.
Nice.
And people talk a lot about fixed rates versus variable rates. And when it comes to investing, we always say it's about the numbers, it's about the numbers, it's about the numbers. But when it comes to fixed versus variable, it seems to be socially acceptable to say, well, if you're scared, go fixed. Well, the numbers have said year over year that a variable rate mortgage outperforms a fixed rate mortgage.
Last 50 years plus.
Yes, a long track record of that. And even with rates rising, I'm valuing mortgage liquidity, the ability to break my mortgage with a low penalty versus payment stability.
Yeah.
And that's what you get with a variable rate mortgage.
And I'm in a product where my monthly doesn't change. Do you know what I mean? It's not like, so rates are going up, but my monthly's not. It would take for there to be zero interest being paid before my monthly changes, yeah?
Yeah, that's right. And that's the product is called the static variable payment, which means the rate and the percentage of dollars going towards principal decreases as the rates go up, but your monthly payment doesn't change.
Yeah.
So the best of both worlds, really.
Yeah, so I can still budget. Okay, so you gave me two. You gave me the A lender, the B lender.
Yeah.
You said there was four.
Yeah, so next is C lending, which is, that's the start of private money, but generally that's more institutionalized lenders. So this is still an organization, a company. They have a front desk, an office, a receptionist, underwriters. It's institutionalized private money. Once again, they're less concerned about your credit rating. They're less concerned about your 2-year average. They're lending on the equity in the deal. So does loan to value make sense? Is there an exit strategy? We're in.
So what's the difference for Rav as a borrower?
Yep.
What's the difference between the B lender and C lender? Am I paying a little more on the C?
Yes.
Because there's more things that are not necessarily favorable today.
Yes, and there's generally less scrutiny in the C section.
Yeah.
So you pay a little bit more for a little bit easier access to capital.
All right. So
and
then
once again, it all comes down to your overall profile. There's a couple different tiers: your credit, your income, your down payment source, the condition of the property.
Yeah.
Lenders are willing to make more exceptions as you go down the lending ladder if the property's in good condition. So that's C lending. Below that is, I don't use the term D, it's full private money.
Private money.
So what private money is, non-institutionalized, it's RAV.
Yes.
Rav is lending his money.
Yeah.
Kyle is lending his money. The ever famous Bob and Mary homeowner are lending their money.
So Rav came across a great property. I may want to flip it. I may want to hold it, refinance. But there's, again, credit issues with Rav per se. Or I already put the down payment down. It's going to appraise at a higher value if I put this into it and do this to it and that into it. But I need that $200,000. I need that money. So when do I use Kyle's money as opposed to ABC lender? Because when Kyle gives me the money, I'm going to pay, give or take, 10%.
10 to 12 in that range. Yep.
Yes. And so tell me, what situation would I use Kyle's money as opposed to C money?
If I like to clarify one thing here first. When it comes to private money, there's two types of scenarios.
Okay.
There's consumer borrowing and there's investor borrowing. So a consumer borrowing situation would be you've lost the job. Your credit card bills are racking up. You're stressed. You're not going to miss payments. Have no idea how you're going to make the next mortgage payment. That's where a consumer private loan would come in. It's a higher interest second mortgage, gives you an injection of capital, consolidates some debt, help you make the payments.
Okay.
That's really a Band-Aid situation.
Yes.
And you may inevitably need to be selling your house.
Yes. But now as Rav the investor.
Rav the investor, why would you borrow private money? Well, one thing is speed.
Yeah.
You can be
I want to close quickly.
You want to close quickly. You want to close in less than a month. You want to close in a couple weeks.
Yeah.
You're maybe looking for a more aggressive loan to value.
Yeah.
Those A lenders cap at 80%. Many private lenders, including myself, are happy to go up to 90. So if you can get a higher loan to value.
Kyle can drive to the bank really fast, get a couple $100,000, give it to Rav, and away I go.
That's right.
That's what you're saying.
Yeah.
We're talking about good friend Kyle Ford. We're learning how we can make money in real estate by borrowing money. Rav can borrow money from a Kyle type and put it into real estate. 1-year term, make my money, pay it back. We'll learn more. Don't go anywhere. Everyday Investor continues in a moment.
All right, guys. Omar Khan here with a weekly market update. I want to talk about inflation. Inflation has been the topic of discussion. It's been the whole topic since the start of the year. You can see prices are higher everywhere you look. What is that starting to do? Well, the real estate market is a lagging indicator. It reacts after interest rates go up. The stock market is a leading indicator. It forecasts 6 months, 12 months out what is going to happen today. So now the stock market has already taken an absolute beating. Worst start, like I said, since 1970. The housing market, however, now because interest rates are going up, is now starting to take a beating. And it won't subside until interest rates stabilize and maybe start coming down, which could be a while still. It all depends on when inflation gets under control. But that's what everyone is contending with right now. And that's exactly what the Bank of Canada wanted to do. They wanted to lower wealth, lower consumption to slow the economy down and to get inflation under control. Back to you. We'll see you next week, guys.
You've always dreamed of having rental income, but buying a rental property? Well, that's a tall order. Capitalize on the space in your home instead. Renovate and rent out that space with ease with LegalSecondSuites.com and the team at Wise Construction Group. With LegalSecondSuites.com, our talented team of BCIN designers, engineers, carpenters, and tradespeople can transform that unused space into a beautiful, legal, and safe rental unit. We're empowering the everyday homeowner to become an extraordinary landlord. Get more out of your home. Visit LegalSecondSuites.com for more information.
Costas Cavellos, founder of First Access Condos. Now, in our world, there are numerous investment opportunities and schemes that people pitch to you daily. Which one do you choose? Which one is right for you? Now, when it comes to investing, you want to invest in something that there's a great demand for, but not enough supply. And everyone knows, in Southern Ontario, the one thing that's in short supply is housing. First Access Condos lets you buy today and reap the benefits in the future. Pay today's prices to invest, sell at tomorrow's prices. That's the beauty of pre-construction condos, and we are First Access Condos.
Hey, it's Rav. Welcome back to Everyday Investor. I'm talking to my friend Kyle Ford. So Kyle, we talked about there's people out there, they're investors, and they want money. They want to close quickly. They need money for renos. Let's talk about the reverse now. Now, Kyle wants to borrow $200,000-$300,000 for his projects, and Rav is now going to be the lender to you. So what does Rav, let's call it $200,000. Kyle wants $200,000. Rav sees what Kyle's doing, likes it, and wants to do that. What else do I have to pay other than $200,000, not pay, invest, give, lend, other than the exact amount? Is there any other fees on my end?
Essentially, no. So the only fees that you have, and this is a little bit of a joke, is you have your gas to drive to the lawyers to sign and your bank draft. So your $7 bank draft to go deposit at the lawyers.
Okay.
In the last couple of years, we've seen most things go more digital, that you can usually email your bank and wire the money for free.
Yes.
But the only fees that you have are the cost to drive your vehicle to the lawyer to drop off the check, and the cost your bank charges you for a bank draft.
Okay.
Other than that, all of the other fees involved are paid for by the borrower.
And those other fees would be what? So put Rav at ease for a second, okay? Yep. So, I'm kind of new to this game, but friends are doing it. They're making 9, 10, 11, 12% with what's called a lender fee as well. Like, tell me about what those other fees are and how it works.
So one of the most important thing about lending your money is making sure that it's secured. So you have a registered position on the property. In order to do that, a lawyer needs to secure that position. So if you were to lend me money secured on my property, the legal fees incurred in that transaction are paid for by the borrower.
You.
Me.
Okay.
I pay the legal fees. So the other fee involved is called the lender's fee. Except the lender's fee isn't paid by you, it's paid to you. So on an example...
So that's kind of weird. I'm the lender, but really what you're saying is the lender fee actually comes to me.
To you.
Okay.
So on a $200,000 loan, a standard fee would be a 1% lender's fee, or known as a lender's bonus.
Okay.
that would be paid to you on closing.
Okay.
So you invest $200,000,
Yeah.
you would get a $2,000 bonus back right away on closing.
So let's just say I'm lending you money at 10%. I'm really lending you money at 11%.
Yes.
Because I'm getting that 1% as well.
Yes.
And that 1% I get as soon as the property closes.
Correct.
Okay. What else? What other fees? Is there an appraisal?
So the appraisal, once again, when you're lending your money, you should always make sure there's the value of the property that you're lending on is validated through an appraisal.
Okay.
Once again, that is the borrower's responsibility to pay for the cost of the appraisal. Now, a very important thing that as a lender that you're going to want to ask for is a letter of transmittal or a letter of reliance to have the appraisal addressed to you.
Got it.
As the lender.
Because you're paying for it, but I want to be able to see it.
You want to be able to see it?
And it should be third party.
And it should be third party, yes.
Okay.
The appraisers are even if the borrower orders the appraisal, and even if the borrower has a relationship with the appraisers are mandated by their governing bodies that they need to abide by moral, ethical, their license is on the line. So even if I know and order the appraisal through somebody, it needs to be done by a third party who is insured, licensed, credentialed, and is addressing the report to the lender. Yeah. That's the key.
Yeah, no, I love it. And for those of you that are wondering, as I wondered many years ago, why would anybody pay me 10, 11%? Well, if you've been watching this show, and you should be watching this show, just kidding, kind of, is that you'll see people making 60, 70, 80, 100% on their money. So what is it that, to them to pay 10% to borrow money?
That's right.
Right? And they'll be able to do things without the headaches of the big five or even maybe the B or C kind of lenders. What a lot of people don't know is that they're also sitting on their own very own bank account. Talk a little bit about refinancing. I'm so surprised, Kyle, that people don't know that they can increase their mortgage, pay a minimum amount, but make a lot, even just lending.
Yep.
Talk to me a little bit about refinancing.
Well, and you said it, not everyone knows this, and there's a fundamental thing that happens here. Whenever you've gotten a home, you and your spouse get together, you go buy your first house. When you get a mortgage, you go get a mortgage and you just start paying for it. The difference when you already have the equity in your home, when you go get a mortgage for more than you currently owed, if you owed $200 and you get a $400,000 mortgage, the difference is a check to you on closing. $200,000 in cash ready for you to invest. So that is the fundamental block that a lot of people have. They're like, well, I'm getting a bigger mortgage. How do I get money? Well, if you have the equity in your home and you're taking a larger mortgage, that's advanced to you on closing. Now, I just want to be very clear. If you're going to take that money and go on vacation and buy a boat and go shopping, I absolutely do not endorse this strategy at all. Pay your mortgage off.
But if I go to Aruba with the intent of buying a hotel,
that's investing.
Okay.
That's right.
Okay. Good.
So, but if you're pulling this money out to invest in real estate, to lend your money at a higher rate of return, to put it to work for you in a long-term strategy, I think leveraging equity here in Canada is a great move. It's how myself, my family, and many of my clients have achieved their goals substantially faster by taking advantage of that bank account that they're sitting on.
Yeah. And you've got to be able to sleep at night, right? Obviously,
100%.
I mean, that's the first thing I say, you've got to be able to sleep at night. Although my mentors in my life would tell me it's criminal to have money in your home, and so it's $1 million home. Everybody has $1 million home here in 2022, apparently, especially in the GTA. So I've got $1 million house. My mortgage was $200,000. Some years have gone by. Now, I only owe $400,000 on it now. There's $600,000 worth of equity, somebody says. I'm being hypothetical here, but $600,000 worth of equity. You're saying they could take out, maybe even if it's just $200,000. They take $200,000, their mortgage increases by that $200,000, but they're paying 3%.
That's right.
They can take that $200,000, give it to Kyle, he'll be able to get me 11, 12%. So the spread there is 8, 9% on $200,000. I mean, there's a good vacation or two to Turks and Caicos if you wanted to, right? Or you reinvest it.
Well, here's the thing. The vacation to Turks and Caicos is there.
Yes.
But don't take the money out and go on vacation.
Yes.
Take the money out, invest it, and use the proceeds of your investment to go on vacation.
That's what I mean. I'm saying I'm giving you the $200,000. I'm making a spread of 9%. right? So
That's your vacation
There's
fund.
my 17, 18 grand to be able to do whatever I want, or even take that and invest it again into something, or
Absolutely.
And so, how long does this process take? So, I give you a call. I say, hey, listen, I have a bunch of equity in my home. I want to pull some out. From that call, your outfit's call, I get the check in how long?
Yeah, so it's about 3 to 4 weeks from when you get all your documents together.
Yeah.
So you do need to, gather your tax returns, your mortgage statements, your property tax bills. It's about 3 to 4 weeks to funding from when you get all your documents together. And if you're going to lend your money, another 3 to 4 weeks before you get it out in your first private lending opportunity.
And I mean, I sign up to your platform there. I mean, it seems like you're spitting out a deal. I don't know, once, twice a week. I see something that where people are wanting to borrow money, and these are people that are investors that have done this before. Yeah.
Yeah, and that's the key to my practice and what I do. As I mentioned earlier, there's consumer lending and investor lending. We only lend to investors.
Yeah.
So we're only lending to people who have the ability to earn a higher return on their money. It's not that lending to consumers is wrong or it's not profitable, just not our business model.
Yeah.
We like to focus on lending to people who are borrowing your money at 10 or 11 because they know how to make more than that with your money.
Yeah.
And if you're getting your 10 or 11% check every single month, all my clients are okay. They want their borrower to make money and borrow it again.
Yeah.
Keep that money moving.
Yeah, I mean, what you're saying is if I do need to consolidate or I do need to, this is not necessarily the place to be, but if I want to grow my money through investment, Kyle Ford and his team is there to help.
Happy to help.
Okay, now, I don't want you to get in trouble, but seriously now, dude, you were about to pull the trigger on a villa in Turks. You've got your cottages out there by Grand Bend, and now we're looking at a hotel in Aruba. Is some of this, is there something sexy about it as well? Or is it just still purely about the numbers, but you happen to have cottages and looking at a villa and a hotel? I mean, talk to me about Kyle Ford's approach.
Yeah, so I will say that I'm still a firm believer that multifamily real estate, the apartment buildings, in a good area of a major city is still one of the best investments out there. That's how I started. That's still a big part of my portfolio. The first cottage I bought was kind of by accident. I wasn't really trying to make money on it. Saw a deal, kind of made sense. I was like, if I could pay the mortgage and use the cottage a couple of weeks, that was pretty good. And then it kind of just snowballed from there. The vacation rental business and the short-term vacation property business is quite lucrative. And the long-term part of it is I am able to secure and own properties that are super unique, in my opinion, irreplaceable, waterfront locations. They're just not making more of this stuff.
Yeah.
So not only have I created a business model that generates a high yield and a high cash flow, but we also have amazing properties, unique locations that can't be replaced. And though my son might appreciate the apartment buildings in the future, I think he'll appreciate the cottages and the villas a little bit more. So.
And these are not for you to just lock up and leave. When you're not using it, they'll be used and you'll make cash flow from that, right?
That's right.
They're investments.
They're all investments for me. Yes.
And is there a certain, because like I say, I mean, you're doing A here and Z here. Is there a certain niche that you kind of want to eventually go down, or are you still exploring?
I am looking to get more into the hotel business rather than the individual villa and cottage rental business. Yeah, and there's a couple of reasons for that. Without saying, there's a lot of regulation in the short-term rental space coming in a lot of areas that are limiting and restricting, and there's some neighbors that don't love that happening in their area. So from a scale perspective and going to the next level, I don't want to be fighting with neighbors about a short-term rental. I want a commercially zoned hotel operation that I'm licensed and allowed to operate to its full potential. So there's some scale involved in the hotel space that I really like.
Yeah.
And if I can have a hotel in a couple different continents, I mean, well, why not, right?
Listen, man, you're the man. I appreciate your work life, but also your play life. I mean, You really know how to do both at the same time, so I congratulate you. Kyle, time's up, man. Thank you so much for being on the show with me.
Thanks for having me, Raf. Always a pleasure.
Yes, and thank you guys for watching. Without you, we would not have a show. If you want to see this show or any others on demand, make sure you go to our YouTube channel and subscribe. Until then, we'll see you next week. Same place, same time. Honey, I love you. I'll be home soon. Bye, everyone.